welcome to one more edition of LM's Weekly Wrap, our weekly coverage of all the events that have impacted the domestic markets, the international markets, the implications of the different developments in the corporate world. With me today is Mr. Jash Shah, who is a senior equity research analyst at LM Securities. So Jash, you will be briefing us about the international developments, which will be followed by my views on the sectoral analysis. So
thank you, sir. It's great to be back with you all. And today was not a very good day for markets. We've been seeing the markets going down sharply after the rally last week. We'd already said last week to be very cautious, and we had felt the market was overbought. But we are going to discuss here today why the market has gone down. So, as we have been saying, the Fed is going to hike rates. So, right now the Fed is on a silent period, and next Wednesday we are going to have a Fed meet. We are expecting 75 basis points hike, which can also be 100 basis points, which is a speculation, but that is due to the recent inflation data of US. It was at alarming rate of 8.3%, which is very high, and that is why they are expecting such a big hike. Also, because of the steep hikes, the global markets feel that the inflation is going to take a toll on the world markets. Also, coming to UK, a silver lining over here is that the UK unemployment rate has gone down to 3.6%. It's lowest in 50 years. That's sort of a silver lining. Also, all this recession fears has led to crude oil prices, crude oil levels going down to $90, about 3% down. So that is something that is always going to benefit India along with the rate hikes. So I think that is what balances India out. I think that's all for the global markets. And as far as India is concerned, I think we are in a good spot. Though the market has been going down, we should still remain cautious. We should start building positions after 21st next week, after the rate hike is announced, as even RBI will be hiking rates soon to keep inflation in check. I would hand over to Nirav sir now for to throw light on the domestic markets.
Yeah, thank you, Jash. The global developments are definitely playing a part as far as the domestic markets are concerned. As pointed out by Jash, the CPI data disappointing the markets. We in the domestic markets have had a kind of a roller coaster ride. It's been a very volatile last couple of weeks have been very volatile for the markets. We started off with a strong rally in IT stocks. We saw good momentum in cement. We saw good momentum picking up in the different sectors. Metals also, as a matter of fact, picked up. But I think today's market was a kind of a reality check for the overall valuation perspective.
I think the fearless traders have been have long trapped in the market.
Yes. After the developments in the US markets, we saw that the fears of the rate hike, the apprehensions about the rate hike, I think the IT stocks have turned very nervous. If one were to take a view of the IT sector, I think it's the whole BSE IT index is down approximately 6% this week. And there have been a slew of downgrades in the IT sector. Though not only the large caps stocks have been downgraded, but even the mid cap stocks have been downgraded. We've been long pointing out that there's a lot of froth as far as the valuation of the IT sector, mid cap IT stocks is concerned. So mid cap IT stocks are particularly bearing the brunt of this valuation. And not only that, we saw HCL Technologies doing a town hall meeting where they have indicated that they are going to lay off some 350 employees who are working on Microsoft MSN project. So I think all these news has led to a lot of nervousness in the IT sector. And one more development could be the fact that Bengaluru has been completely flooded and this has raised serious doubts about the tech hubs' ability to cope up with the natural disasters, and the infrastructure is crumbling. There have been a lot of critics who have pointed out that the infrastructure is crumbling over there. So this also raises doubts about India's IT hubs. The quality of the IT hubs is deteriorating slowly. So these are all intangible factors, but these could also play a part in being a spoiler as far as the IT story is concerned.
So adding to that, I think with the IT, the US markets directly impact the IT sector.
Yes.
To add that, which raises concern, is that two US companies, that is FedEx and Alco, that's aluminium company, they've also given very negative commentary on basis of recession. They feel there is going to be the demand is going down and there will be a bad year coming ahead.
So they have reduced their guidance. And that also has led to some nervousness in the market. So apart from the IT sector, I think the metal sector is also, it's got a direct correlation with the developments which are happening in China, and China is increasingly showing signs of slowing down. So with this slowdown, I think metals also are increasingly under pressure. Incidentally, one other stock, which is Vedanta, has been it's a metal stock, but it was one of the largest gainer of the last week. This is on the back of the announcement that it's going to invest approximately 1.5 trillion rupees in setting up a project with Foxconn for manufacturing semiconductors in Gujarat. So I think today there was some clarification that this investment is not going to come from Vedanta, but it's going to come from from another company entity belonging to the same group, which has led to some correction in the price. So one needs to be a little bit careful and check the facts before plunging into such stocks on the basis of such announcements, which are made on a random basis. Apart from this, I think now we come to the financials. I think the financial sector is showing signs of coming back. It's on the comeback trail. Bank Nifty has hit a record high, and the credit growth is beginning to look up. Deposit mobilization is picking up. NIMs, that is the net interest margins of banks, are expected to improve going forward. And overall, there's optimism. There's a sense of optimism about the festival demand coming back. So I think banks are doing well, and in this space, of course, we like our prime picks are SBI, State Bank of India, ICICI Bank, Axis, and Kotak Mahindra Bank. In this week, I think even IndusInd Bank has performed exceptionally well. So it's looking quite good. Apart from this, we have sectors like cement, where there are developments relating to some corporate actions which are taking place. For example, Adani Group, it has taken over Holcim owned ACC and Ambuja. And I think the whole dynamics of the sector are beginning to change now. We are beginning to see some developments like Adani Group is going to get benefits of a lot of synergistic benefits likely to accrue to ACC and Ambuja. That's what the market is feeling. A lot of mid-cap and small-cap cement counters are also buzzing around on hopes of consolidation in the sector. Ultratech Cement, of course, is quite laid back at the moment. It's one of the biggest player in the industry, but we are seeing a lot of buzz in the cement industry, and this is not on account of the fact that the demand is picking up or the prices are beginning to move up, but solely on the expectations of some consolidation happening in the sector, some hopes of demand revival, etc. happening. So it's essentially a hope rally which we are witnessing in the cement sector. Another set of stocks which we need to take into account is the Adani Group stocks. So we've seen the Adani Group stocks, where the 7 companies of the Adani Group, the market cap is now exceeded 20 trillion. So I think it's a huge.
That's more than Tata combined right now.
Yes. So Adani Group, one needs to be a little bit cautious, because there is serious under ownership which is there in the Adani Group stocks. Secondly, approximately the promoter holding is very, very high, close to 70% in almost all these entities. Third factor is FIIs hold approximately 12 to 15% of the stock in this. Fourth factor is that the floating stock is very, very less. The fifth factor is even stocks like LIC, even entities like LIC, they own substantial chunk in these companies. For example, in Adani Ports and SEZ, we've seen that LIC holds 9.82% stake in the company. So it's close to the limit of 10% which they can hold. In the Adani Group stocks, I think one needs to be a little bit wary and needs to be a little bit careful because there are serious under ownership issues over there. Apart from that, most of these stocks are now likely to come in the main indices. From 30th September, we are likely to see Adani Enterprises come into the Nifty. So apart from Adani Ports and SEZ, now we also have Adani Enterprises. We have Adani Total Gas, which is going to come in
the Nifty next 50.
Nifty next 50. And Adani Green Energy is also set to come into the indices very soon. So it's going to be a fund manager's dilemma because most of these companies in the Adani Group, they have huge upfront investments, but the cash flows have still not come. They have huge upfront investments and they are now being included in the main indices. So getting a handle over valuation is going to be a very big dilemma for fund managers.
I think it needs to be a wait and watch because unless the cash flow doesn't come in, the fund managers can't really take a solid
inclusion
decision.
In the main indices
that would definitely create fund balances.
Yes.
That's
so
right.
Balancing, as far as the balancing of the portfolio is concerned, so it's really it's a perplexing situation which we have not seen till now in the markets. Right. So that is one factor to watch out for. Apart from this, as indicated by us earlier also, we continue to like defense stocks. I think the defense stories continue to do very well. Even in today's market, we've seen Bharat Electronics, Bharat Dynamics, Midhani, Garden Ridge Shipbuilders, Cochin Shipyard, Mazgaon Docks. All these stocks continue to do very well in trade. We have hotel stocks which are seeing a very good amount of momentum in the market. Yesterday we saw tire stocks which are on a roll, and today they did give up some of their gains, but I think tire stocks enthused by the fact that demand is likely to come back very soon. So I think no dearth of stories, no dearth of ideas in the market, but one needs to be a little bit cautious because we are facing tough global cues. The experts are of the view that global markets are likely to retest the June 2020 lows. So one needs to be a little bit careful in our market, though our market has been very resilient and it has been showing a good amount of strength, but still a word of caution is definitely, and one needs to keep booking profits at regular intervals. It's very important to take some money from the table.
I think booking profits is very healthy for the portfolio. That will always have some kind of cash there for to buy it when it hits the low.
Exactly. So that I think kind of sums up our program for today. You can write to us with your feedback and we'll respond to you by YouTube, and we'll look forward to meeting you in the next program of LM's Weekly Wrap. Thank you, everybody.
Thank you.